And we are live. All right, ladies and gentlemen, welcome, 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 welcome. Thank you for your time. Thank you for choosing to hang out here today. And before I get started, I have to say this because of the laws that we have here, because of, just and to make sure that everybody is on the same page. There's a general disclaimer. Any information that I provide here is simply my opinion. I'm not a financial advisor. I'm not an investment guru. Under no circumstances do any of the statements that I make here represent any recommendation to buy, sell securities, cryptocurrencies, or any kind of market investment. You are responsible for your own due diligence. I do not provide investment advice, nor do I make any claims or promises of any information here that can lead to profit, loss, or any other result. The information is for educational and entertainment purposes only, so please, please, please act responsibly. Consult your financial advisor before making your investment decisions. Okay? We got the formality out of the way. Let's get to the fun stuff. All right, who am I? I'd like to give you a really quick intro without getting too deep into it. I'm just a regular guy who is going through the same journey, creating my own businesses, and part of the business that I built out is Body Mind Success. Part of the branch of that has been to be able to help businesses, individuals align their mindset from what they want to where they're wanting to get. Because one thing is very clear to me. The way that I think is connected to the way that I feel. The way that I feel is connected to the way that I act. And the way that I act gets me the result that I have. So if I don't like my result, I've got to change that. So that's kind of like the philosophy of what we have. And as we go through the journey, I've had a lot of great opportunities to help a lot of people. So for today, particularly, we're talking about Bitcoin. So what are we going to talk about today as a general? And then from there, getting to the specifics of what you want to know. So this particular, I'm going to call it a crash course, is just the very basics of what's Bitcoin, why is it such a big deal, how to get it, how to grow it, how to store it, well, at least how have I done it, and how I've seen other people done really well with it as well. And where do we go from here? Okay, so you guys already know the evolution, so this part I can fly through really fast. We've come a long way from where we were. First exchange of currencies were beans and rice and precious metals and so on and so forth. It's too hard to kind of keep it going. So come fiat currencies, paper money, coins, made it a lot easier to be able to transport that value. In 1971, the dollar went off the gold standard, and then money started being printed out, which is a whole conversation we can have on its own. Then obviously credit cards came along, which made it a lot more convenient. And then we started moving into the online payments, which made it even more convenient to be able to make those payments. And now we've moved into Apple Pay and the phones because everybody has a smart device, which has made it a really beautiful pathway to be able to move into the cryptocurrencies, which is now what's coming to fruition. And even though we still have a long way to go, it definitely has a lot of attention and a lot of growth. And we know that this is something that is going to be disrupting a lot of industries. So I didn't believe in this stuff when I first heard about it in 2009. And it literally cost me millions. I know all of us have stories or have heard stories. I happen to be one of those stories, and you'll see that in just a moment. But one of the more popular ones is the student, Christopher Cott, who purchased 5,000 Bitcoins for $26.60 in 2009. Well, he was doing a study, right? So when he checked his wallet, he forgot about it, totally just didn't think about it because it was just $26. Who cared, right? But in 2013, the value of those same coins, those 5,000 coins, was $886,000. So basically a millionaire when he checked it in 2013. Well, had he kept it a little bit longer, which we don't know exactly what he did, but today, if it was at $11,000, which is kind of what the price is today, as I do this presentation, per Bitcoin, it would be approximately $55 million. Now, that's a story in and of itself, right? So if I heard about Bitcoin in 2009, and I started this slide with if I only followed through, because in 2009 I said, hey, let me put $100 at it, see what happens, whatever. But when I started that, I realized, I'm like, where do I get it? Where do I store it? Who do I buy it from? How do I keep it safe? Who do I go to? It wasn't as clear as it is now. Now it's still not clear as it can be today, but it was a lot clearer than it was back in 2009. Now, after 2009 and I just sort of put it off to the side. I'm like, I'll get back to it later. I didn't follow through. And then I went on to have my daughter in 2010, and I forgot all about this Bitcoin stuff. Well, if I had followed through and put those $100 today at $11,000 would have been $206 million. So I'm like, God, we all have our stories. I'm sure that a bunch of you have the same stories. I look back at this. I have no resentment for it, but I definitely have the awareness and a beautiful lesson to go, okay, I missed a boat once. I'm not going to miss it again. So the second time around that it's, we've seen Bitcoin grow, I'm going, I'm in here. And so back in 2016, I think it was, I started collecting a little bit of Bitcoin. And some of it I kept, and some of it I lost as I've gone through my journeys. And this is a meme that's been around. That's people are kind of playing around with what you will be able to get in Bitcoin. Now, is it true that you're going to be able to get a yacht from what Bitcoin? Who knows? But it certainly seems to be going up. The other question that I often get asked is, who's accepting Bitcoin? And I'm kind of going past through this because I want to get to the other stuff that you want to get to. But this just sort of puts a general foundation. Who's accepting it? You've got all kinds of companies accepting it. I mean, these are just a few that I pulled off of online. You've got worldwide companies that are really venturing into this, and you're seeing more and more and more and more places starting to accept either Bitcoin or another cryptocurrency, because there's others that are starting to make more headway into the market. So now we get to the main things. Like, well, how do we get Bitcoin? How do we grow it? How do we have it? And how does it even get used? So I'm going to go through the very basics of it first, because some of you mentioned that you're totally new to it. So first of all, when you're wanting to get Bitcoin, you need a Bitcoin wallet. And then you take your regular cash, your regular money, and you go to an exchange. Just like if I was to go to Mexico, which is right down the street from where I am, or 45 minutes away, I take the US dollar, I go to an exchange booth, or in this case, an exchange online, and change my dollars for Bitcoin. And that Bitcoin gets stored into a Bitcoin wallet. Now, some exchanges are wallets themselves, but I don't make the practice to keep my money or my Bitcoins in the exchange. I usually use other wallets. And we'll get a little bit into that a little later. Generally, it would be a wallet that would be on your phone, or it could be a hard wallet, or it could be a paper wallet. And that's a little more technical, but you can do any of those. And what are some of these exchanges? Some of the ones that we've heard the most of, and they're more popular: Coinbase, Uphold. I mean, there's a bunch of them. And you don't need to write this down, because what I'm going to do is, before you leave, I'll give you a resource that you could have a bunch of all this information for free. And you can go at your own pace to have it. So how do you use Bitcoin? Like, the next question is like, okay, I got it. Now what do? I got a wallet. I've got Bitcoin. How do I use it? Well, you give your wallet. Whenever you're trying to send Bitcoin to somebody else, that's got to go through a network. And it'll be an address that's a big old long thing, something like this. And when a transaction gets started, all of these are different computers all around the world that are saying, hey, I want to help verify the transaction. I want to check. So every single one of these computers have the blockchain, which in essence, people are like, well, what is that? It's basically a ledger that keeps the transaction of everything that has ever happened with Bitcoin. Now think about that for a minute. Let that sink in. That means every single computer has that ledger, and every single computer has that same information. And now they're saying, hey, I want to verify, I'll help verify to make sure that transaction is good, that this wallet actually has the Bitcoin, and that the wallet that is going to receive it can actually receive it. I want to do it. Everybody says I want to do it. So what happens is they have to solve a mathematical equation, or at least one of the methods. You have to solve a mathematical equation to compete, to have the right to make sure that you can actually make that transaction. A few computers win, 1, 2, 3, 4, 5, and I'm taking a little more time with this because this becomes important in the next phase, which is mining. So with these computers that end up solving that equation and said, okay, they get the right to verify that transaction, that process is called mining. and they get rewarded for that in Bitcoin or in some other currency. Once they all agree, yes, it's good, 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 then that Bitcoin will actually get transferred to the other wallet. This is the power of what we're talking about. This is why I have to slow this part down right here. This is the blockchain, the trust method that doesn't require one organization to verify that that transaction is valid or that agreement is valid. This means that you can have any kind of contract, any kind of agreement that goes through there, and this is what's done in other currencies, but Bitcoin is specifically for exchanging value of Bitcoin, which can be turned into fiat. That's where the value for Bitcoin is. What ends up happening is once that gets verified, it's a trusted network, and it goes in there. And we'll talk about security a little later. But that's the basics of how to use it. Now, how do you turn Bitcoin into regular currency? Well, it's just the other way around. You take your Bitcoin, you run it through an exchange. That's one way to do it. And then you get your regular currency, your regular US or whatever currency is for your country. You get it into regular cash, and then from there you can spend it. Now, you can do it through an exchange, going back to the same ones where you bought, or one of the things that's we've been able to do, although it's run into a little bit of a glitch recently, was having debit cards that you can put your Bitcoin in there and then convert it right on the fly and actually go through and be able to pay like you normally would with a credit card. Now, one of the things that'll start to happen, in my belief, is that pretty soon we'll probably see it in phones too, like Apple Pay or things of that nature. But we still haven't got there. Okay. Now, this is a question where you guys are getting. This is probably why you mostly hear, like, how do I grow this thing? How do I grow Bitcoin? And you can transfer Bitcoin, the Bitcoin word, into cryptocurrencies. But Bitcoin is what's most popular. So in order for me to grow it, I've got 3 strategies. There's really 4, but one of them I just lump into the other. One is acquire and hold it. You buy Bitcoin, you buy Litecoin, you buy Ethereum, you buy whatever coin you're going to do, or cryptocurrency. Then you go to an exchange, you exchange your money for that currency, and you put it in a wallet. Then you just leave it alone, come back later, because you believe that's going to go up in price. Then you can cash it out later. The second way to do that same thing for acquiring is, you've seen this more and more every day, is businesses and individuals that are accepting payments in cryptocurrencies. And then they put that in their wallet, hold, and let it go. Now they can exchange it whenever they want, but that's another way to do it. So this is what I call the acquire and hold strategy. The second way, and it leads right into this, what everybody wants some, is through mining. Well, shoot, I want to, that's one, I can buy it, but is there a way to make it? Yes. You can be part of the network that verifies those transactions, and you get paid in that cryptocurrency. I know a number of you are actually doing that, which is awesome. And there's going to be a lot more opportunities for people to be able to do that. And that Bitcoin that you earn, or whatever currency you earn, it goes into your wallet. Okay. Now, the third method is through trading. Now, you take your cryptocurrency, you put it through a cryptocurrency exchange, and then there you can start to trade. Now, this comes in very handy because you can take your same investment and be able to, if you understand how to trade the market, then you're able to, if you do it well, obviously, then you're able to play the dips, what we call it, playing the dips. When it goes down, you sell out before it goes down, and then you try to pick it up towards the bottom so that you can actually get more, and then you end up increasing value in how many coins you have, in addition to whatever value they gain. Now, this is it's a risky market. It is a risky market. It's just like playing stocks. And then I'm going to take a moment to address the question that was brought up earlier. How is this different from stocks? And how is it the same? Now, I've never done the Forex market or a whole lot in terms of stocks directly. I've done it mostly through my financial advisor. But here's what the process, part of the difference is. Number one, if you're going into the stock market, investing or futures or commodities or anything of the sort, you usually have to go through a broker. or a financial advisor or some sort of firm, you have to be able to, you have to contact them and say, I want to get into this stock. I want to put my investment there. Wait, now I got to call you again. I want to change that. I want to make that go somewhere else. I want to put it in this particular stock. And then obviously fees are being paid along the way for the advisor, the broker, the actual trade. And so you have all that that's happening. In cryptocurrencies, you don't have to go that far. It's just you take your Bitcoin, you put it in an exchange. Whenever you do a trade, you still have fees. You put those in there. You take that into account in your trade. And then if you get out profitable, then you end up being able to get more, right? The middleman is the exchange. And sometimes when you withdraw, you also have to make sure that you'll also get a fee. In some place, some you do, and some are getting better over time. So let me turn my phone off because it keeps trying to do its messages thing. So as we get into cryptocurrency, here is one of the things that I think is important for all of us to know. Every market has cycles. Okay, and when I first started, I wasn't aware of this. I was like, I knew that they went up and down, but I didn't know that there was a continuous pattern that was happening. And when I became aware of that, it made it a heck of a lot easier to be able to do trading. And then over time, I gathered more and more tools that helped me to do that. But here's the one thing, that's the fundamental piece, that if you're thinking of going into doing any trading, you have to, you don't have to. You could just skip it, but you're going to go through it, which is understanding how important your mindset and your emotions play in this. It's huge. Huge. Here's a Wall Street cheat sheet. It's the psychology of a market cycle. And I like sharing this because every single one of us goes through this. Like if you haven't already, you will, because it's just part of the nature of how this unfolds. Here's initially with Bitcoin. Bitcoin, that ain't gonna work. I'm not really sure that's gonna happen. I don't know. That's I don't believe this internet money. You know what? It might have a chance. I don't know. That seems kind of interesting. This is kind of where I was in 2009, right? Then it's like, wait a minute. This thing is really starting to, it seems like it could work. This could be really powerful. This could be really neat. You're like, hey, this is working. I got to do this. I really got to get involved. Now it's like, oh my God, awesome. I'm making money. I've doubled my money. I'm so excited. Yes. Now I'm going to get rich. I got to tell all my friends. Everybody's got to come in. I got to start buying my house, my Lamborghini. I'm ready. Let's go. Let's do this. And then all of a sudden there's a dip. Like, oh, it's okay. It'll be all right. It'll be fine. It's just a little dip. It'll come back. The market will come back. That's complacency. You're like, wait a minute, it's not coming back. Well, why are you dipping? Whoa, back up. If you're into futures or options, all that, you're getting the margin calls. Hey, where's the money? It's like, well, what's going on? And I was like, oh my God, no. This is, I'm sure this Bitcoin and all these companies, they're great companies. I know I've researched it. I've done all this stuff. Oh my God, that's so, geez, what's going on? Oh, damn, now I got to, just sell it off. I need to get out. I need to say whatever I can. And now you're like, why in the hell did I ever get into this? Why? God, I can't believe that the markets are being so manipulated, blah, 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 blah. Now again, it's like, I just threw my life savings into, oh my God, I can't believe this. Depressed, how could I be so dumb, blah, blah, blah. And guess what? You go right into the next cycle. Go start all over. And here's the difference between when you're starting out, or what we would call an amateur trader, and somebody who's either has even some knowledge or a professional trader. Professional traders, they know that there's going to be another cycle. They know this is going to rally back up again if it's fundamentally sound. And so even if they happen to get caught somewhere in here, they're like, that's all right, just hold, be patient, hold on. And when this rally happens, here's the really interesting thing. The next cycles tend to be bigger than the first. So when you understand even just that, then all of a sudden you're like, okay, you can start to feel, you still feel the emotions, but at the same time, you're like, okay, wait, I don't need to panic. It's all right. We got Bitcoin that dipped from 20,000 to under 10,000 to a 9,000. It may dip a little bit further into the 8,000. You don't have to freak out, because fundamentally, Bitcoin, in my belief, is that it's here to stay, and cryptocurrencies are here to stay. So I'm going to pause that part of it here, because from here is, don't miss the boat and all this stuff. And this is just a little quote, and then I'll get into more of your questions here. I thought it was a really neat picture that I found online. It said Mark Zuckerberg, the CEO of Facebook, invited 5 people to his Harvard dorm room 9 years ago to discuss a business opportunity. Only 2 people showed up, and they got in that day. Today, those 2 people are Dustin Moskowitz, who's worth $6.5 billion, and Eduardo Saverin, $3.4 billion. There's nothing more expensive than coming into something with a closed mind and missing an opportunity. So you guys are already past that. That's why you're here. Otherwise, you wouldn't even be at this chat and asking the questions. But you are literally still at the beginning of this entire process. So what I want to do now is I'm going to share with you some of those, start addressing some of those questions that you have on here, and being able to share some of the software and some of the things that you're asking. So as far as crypto and stocks, I'm going to start from the beginning. I know I talked a little bit about it, but I'm also going to say this. The cycles that are happening within stocks and the regular market of what I'm going to call the Forex traders, they've had a history, whereas cryptocurrencies have not. Cryptocurrencies have not had as long of a history. When you look at a company in Forex, you have to look at their PE ratios, you have to look at their projections, you have to look at how long the company, who's been running the company, who are they connected with, all that kind of stuff. And they've been around for a while now. So they've matured, and as market matures, there's not quite as much volatility. It's not the same. So whereas cryptocurrencies, they're new. Even Bitcoin has only been around for 9 years. That is nothing. Well, 10 years now. Well, 9 years. Yeah. That is nothing in an overall market. So one of the things that's happening, and I've seen this, and before I get into the tools, it's important to share this with you, is that the patterns that you see in Forex, even though they repeat themselves inside of a cryptocurrencies, they're different because of their age. They're much younger. Cryptocurrencies are much younger, so there's a lot more volatility. Now, if you go back to what I said, it's about mindset. Think about it this way. If somebody's coming into Bitcoin at this point, they're kind of risk takers. They're willing to go in there, be the forefront of it, right? So even though they're willing to take that because they see that there's a good possibility this is going to grow to be something huge, what they come to find out is like, wait a minute, this is dipping really fast. I need to get out. So the volatility, getting out quick, getting in, getting out quick, that mindset tends to be more prevalent here. Whereas some of the companies that have been around, like Apple or Google, those companies aren't going anywhere. So even if it has a dip, you're not as concerned because the likelihood of Facebook going away, the likelihood of Google going away, the likelihood of Apple going away, it's not very high. So holding for the long term is a lot easier. Whereas cryptocurrencies, it's not, because you don't know if that coin's going to be around a year from now. Though that coin can have a really great upside potential. Okay, so that answers that part. Now, before we start jumping over to Coinage and all this stuff, I promised you guys that there's something here that you could use and be able to get resources. I'll put this at the end as well, so you have it, and I'll throw it into the chat. But what I've done over time is I've actually gone through and I've been documenting things that I found to be helpful. Where do I buy Bitcoins? What wallets do I use? What debit cards can I use? Where's the offline storage? What are the trading tools that they use? What are the commonly asked questions? What are the updates that I'm finding? What are some of the new sites? What is mining and trading? All that kind of stuff I've put in here, and it's free. Anybody can have access to it, okay? because I wanted to be able to continue to help this movement along. See, by my continuing to educate people into this crypto world, then it's going to start being helping the movement of it being adopted. And as it gets more adoption, more money goes into the market. More money goes into the market, my own investments obviously go up. So yes, it helps me in the long run, but it also, one of the things that I've known is that the more people I'm able to help, the more successful I get to also become, because there's eyes that are looking all over the place for the same kind of things. So that being said, one of the tools to answer the question now about what software do I use? Okay, if you're going to start with something, I'm going to start with this. Okay, in Bittrex themselves and the exchanges themselves, they have charts. Now, those charts, if you're just starting out, they're not very, they seem fine, but they don't give you a lot of tools and a lot of resources. Okay. For example, let's go XLM. I'll just pick one of them. We'll see the chart pop up in a minute, and we'll be able to see that there are some tools there that are available. Now, if you're just going to do very, very basic analysis, that'll be fine. And I'll show you how to do so it's got to use a couple of tools to just sort of be able to move along. However, there's another tool that pretty much every trader uses. I'm going to go here while it finishes loading. There's this particular one, Coinigy, is one that's specific for cryptocurrencies. Okay. They offer a free month, and then after that, you can go ahead and decide if you want to keep it, buy it, whatever. So if you don't, then you just keep creating accounts. Obviously, that's up to you. However you're going to handle it. That's what some people do. So, but it's a very powerful resource, and I would not be trading without it. I would not be trading with at least this. There's another one that's more advanced. It's called TradingView, and that actually has not only cryptocurrencies, but it also has regular markets. But what I've found is that there is just way too much information, and it gets overwhelming for many. The other thing that I also found is that, for example, Coinigy is specifically for cryptocurrencies. So when a new coin hits an exchange, then that coin is immediately listed on Coinigy. Whereas in the other software, I found that sometimes it'll take 2-3 days, maybe a week. And now in 2-3 days and a week, a lot can happen with a coin. So you want to make sure that you have something that's up to date that you're able to utilize and be able to benefit from. So that's that. So that's the software one. Let's see. Where do I find research opportunities and all that? Awesome. I'll get to that in just a moment. But before I do, let's do this. Let's get you a little bit of one tool that you could use. And I'm going to use it in Coinigy, although you can probably do it in Bittrex as well. There's so much to share with you. That's just crazy. So I'll do it in Coinigy because it's easier. But let's go to Bitcoin, because everybody wants to know about Bitcoin. Where's Bitcoin at today? What is it doing? USD. Okay, so here on the left side are all a bunch of the exchanges that carry Bitcoin USD pair. In particular, I'm going to, since I've been talking about Bittrex, I could use Bittrex, Bitstamp. I'm actually going to go Bitstamp for Bitcoin because it has more data. It's been on that exchange longer. Over here, you can do the intervals. This is a 1 hour interval. I can do a 1 month interval for Bitcoin. Okay. Now, this will give you kind of a sense of where. I'm going to start with this. You know, all that panic that we've had in the past about what China's doing and what what Jamie Dimon said and what all these individuals say. In a month's perspective, so each of these little, what they're called candles, each of these candles represent an entire month. Like, where did the price start? Where did it end? So if I look at one of these, let's take a look at just this one right here. I'm going to put the marker so we know which one we're talking about. Let's just look at that candle. So that candle itself, the price opened at $742, and it closed at $997.75. Now, I can look at it by moving my little line, or I can look up in these numbers right here where it tells me. When Jamie Dimon and the Chinese were doing blah, 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 and all the news that you hear about, those represented these little candles right here. And that little candle. Now, by now, if you take a look at what's going on here, what's starting to grow here, and we go back to part of the presentation where I was sharing with you today, and let me go and pull this up so you can see it right next to it, or right by it. Okay. Let me close it up a little here. When you look at the overall graph, and I'm trying to make this a little bit smaller, but it's big enough that you can see it. There we go. You see the little bump right there? That's maybe that little bump. Disbelief, nah, this Bitcoin thing isn't going to work. It's, you know, I don't know it's really going to happen, blah, 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 blah. And then it starts to gain some momentum. Hey, you know what? This Bitcoin thing might actually kind of work, right? It might actually, ooh, this could be really good. I don't know. I'm just going to take my profits. I'm out of here. Red candle means people have bought it, and they're basically, they're selling it out. They bought it. The green candles are people, the price going up. The red candles being the price is starting to drop. And that's usually when people start to take profit. Now, when you're like, oh my God, you know, Bitcoin's going to crash. There's going to be a big crash in Bitcoin. Bitcoin's going to go down, blah, blah, blah. Okay. Keeps going up, keeps going up. This is what they're talking about. Oh my God, you know, it's crashing, but let's go back to our image. Is that little dip right there? I mean, really, in the bigger picture of this coming year, So one of the tips, one of the resources, one of the things that I would suggest you take a look at before you look at a coin as to what it's doing, what's the price on it, look at it from a bigger time frame. What's the biggest time frame that you can do? Now, some of these coins are so new that you can't do a month. So if you can't do a month, do a week. Okay? Now, let's think about this for a moment. A month, if I was looking at a month, back to this, that would be this candle right here. If I look at it in a week, I say, well, there's approximately 4 weeks in a month. So that's the last 4 candles. 1, 2, 3, 4. But could be the 5th as well, because I mean, January had 5 weeks, somewhere roughly around there. So it's looking 5 weeks back from where you are right now. And that big red candle that you saw is the representation of this right here. So it came down, it started to come up, it came down again, it started to come up, and that's why I believe that there still may be another little dip. Now I'm going to give you tip number 2. And this would be something that I'm keeping in mind, that you may not be ready to play with a lot of the tools. But here's one tool that I've realized that it's so simple to use, but it's very powerful. There's always a trend that's happening, some trend. So if you have a Coinigy or any other tool, or even if you have to print it out and do it by hand, notice where there are some trends. Look at this, roughly speaking, I see this thing kind of going up. So I kind of see a trend going this way. And can I take it all the way down here? Well, not really. I could do it separate. I mean, if trends continue and then often get broken. Okay. So initially, when we were first here, I would be looking at something like that. Going, okay, as long as the price doesn't bounce doesn't break through this line, and I'm going to stick around. So boom, didn't break through. It's going up, but I don't know which way it's going to go yet, right? So I could also draw a line above and try to line it up with what we have there. See, there's a general trend. There's like a little channel, if you would. And so what I start keeping an eye for is, okay, is it staying within that general trend, or does it break in one direction or another? Okay, it's coming up. Oh, look at this. Huh. Right here, it broke through to the upside. When something breaks through to the upside, it generally will continue to grow for a while. Now, how much you start getting into different patterns, different things of that nature, how far to go, that's like, I mean, I don't know that I'll get to all of that today, but it definitely gets you kind of going with this. Once it breaks a pattern, then you can start drawing trend lines in a different direction. Going here. This is where I was. Now I'm going to draw a trend line because I see it kind of going this way. As long as it stays above that trend line, I am going to stick around. Once it starts to break below that, maybe I start thinking about taking profits. Okay. Now look at what happened here. You see that? It started going up, 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 boom. Now, it looks simple enough, right? But here's the thing. Sometimes we start to freak out a little bit because this little candle, or this big candle, I guess you'd call it, that represents the high of that was 19,300. It dipped all the way down to 10,000. You're like, oh my God, oh my God. Now here's where people start to freak out. They're like, oh no, I need to get out, I need to get out as fast as I can. And then they end up selling way down here. Now, people who have been around, who do this constantly, they know that this thing is going to bounce. And they're going to, even if they have to sell out, they're not going to sell out at the bottom. Because there's other buyers that are going to be trying to buy in. And then eventually they're like, okay, you know what? That's what I think as far as it's going to go. I'm going to go ahead and get out here. Cut my losses there. Or even actually wouldn't be losses because they're still being profit if they came in here. So trend lines are very powerful. So if you notice, and they all kind of go with one another. I mean, I can extend this line right here. And right now, we're actually at a pretty important point in Bitcoin because we don't know if it's going to bounce from here and continue its rally up, or if it's going to break through. And if it breaks through, then it's the next point of where there's some level of support, and that's why they're called support and resistance lines. It would be down here. So now you're going, but if it gets down in this area, you're talking $7,000 to $8,000. So now, that's why I say I'm not convinced that Bitcoin is done yet with its complete retracement. Now, could it be? Yeah. And am I watching it really closely? Absolutely. But if it breaks through here, and what I mean breakthrough is, you see how the whole colored part is considered the body, and the body of a candle, and the lines that you see above and below are considered wicks. So that means the price went as high as that, the price went as low as that. But at the beginning, it started there when I first started my day. It was selling at 14,115. And when the market closed for that month, for that week, it closed at 13,867. So it closed lower than when it started. That's why it's red. For the green, it would be it opened here and it closed up here, even though the price fluctuated back and forth. So when the body breaks through a resistance or support, then I'm paying a lot more attention what's going to happen on the next candle, because I'm going, if it keeps this downtrend, it's not going to stop till it gets down in this area. So literally, I could stop right here. And if you have taken just this information, just this piece, and start playing with it, then you can start feeling potentially a little bit better about, like, okay, at least I kind of have an idea of where there's things that are going to start to break down or things are going to break to the upside. Literally, there's a coin that I call Pivx, where, again, it's not advice. I'm not telling you to get in it. But 2 days ago, I saw a pattern. I put my resistance and support, and then it broke through. I was like, I think it's going to break through. I'm not sure, but I'll go ahead and get in. And within half hour, that thing made 50%. I was like, great, get out. And now I was looking to get back in. So when you understand that it may bounce right here, so people are saying, hey, this may be the lowest price that you'll see Bitcoin. It might be. It could be that this 10,000 mark was, or 9,000 mark was the lowest you'll see it for a while. But if it breaks through here, it could get down into this region. And here's the thing. You have Bitcoin. The reason I'm focusing so much on Bitcoin is because Bitcoin affects the rest of the market. There's this site, which is called CoinMarketCap, which gives you information on over 1,400 cryptocurrencies. And just a very little tidbit of information, because I don't want to overwhelm you with too much and then not being able to use it. There are 1,491 cryptocurrencies. When I came into the market, there was only 300. It's within the year. That's grown huge. Market cap means how much money is circulating inside of all those markets. And that's 544 billion. Now, that when I started, this was at around 100 million, it was like 300 million. That's crazy. That's crazy growth, right? And then over here, this number tells you how dominant in the market is Bitcoin. Now, when we first started, Bitcoin was obviously king, and it had it had most of the market. And over time, some really good projects have come along, and therefore, they've taken some of that market dominance. But Bitcoin is still king. So if you're not paying attention to what Bitcoin does, and you're trying to do other coins, then it may be a bit of a challenge. I know some of you in this group for example, in XLM or Stellar Lumens. Now, Stellar Lumens, from my observations, has tended to move more with Bitcoin. Whereas, for example, let's just pick another one. There's Siacoin. Siacoin has moved in the opposite direction of what Bitcoin has done. So if Bitcoin's going to make a jump up, this coin is likely to go down. And then once Bitcoin stabilizes, then it tends to kind of continue its path. So let me make sure I'll keep answering your questions, because otherwise I can just go off on a tangent here. So I talked about the software. Crypto. Where do you find research for opportunities? Okay. There are a couple places where that can happen. Okay. Well, there's a lot of places. People will tell you, hey, you got to check out Waves. Oh, you got to check out this site. Oh, you got to look at it. There's that. Now, here's my take on that. Everybody all of a sudden is an expert on Bitcoin and cryptocurrencies because a friend of a friend told them, and a friend told them, and because they said it was really good, right? To me, that's not good enough. That's not good enough. However, it doesn't mean I won't take a look. Now, when I take a look, I know what I'm looking for. The other way is people have said, hey, you know what? Let me buy into a service that I know does some of the research, and I know some of you have. And from there, at least I can start with coins that are good. XLM has been a really good coin. I mean, they're paired up with IBM. It's not a bad deal. I mean, IBM kind of know what they're doing, right? So there's a good chance that ends up being a really good coin. And it can withstand some of the growth that Bitcoin might have, because honestly, some of these coins will be gone next year. Which ones? Nobody knows. But the stronger fundamentally ones, the ones that have good projects, will probably withstand the growth phase, and the ones that that don't have that foundational strength, then they will collapse, and then there they go. It doesn't mean that people won't make money from it. They still will.
Hey Leo, I just wanted to pipe in here real quick.
Go ahead.
So I think most of the people here have kind of, are contributing to the group buy that we're doing with James'
Mm-hmm.
Altitude newsletter and Tika's newsletter. For those of you who are not, and you happen to be on this, so one of the reasons that we we invested in James and Tika, it's for people who are starting off, finding coins and finding these opportunities, tracking trends. It's a lot of stuff.
Mm-hmm.
What Leo is sharing with you is kind of the next level. It's how to start to look for opportunities even before Tika and James, or other newsletters might even put them out there, because
Exactly.
there's a lot of gossip and hype, and every time someone sneezes, the market panics. When you have the kind of fundamentals that Leo is sharing with you, you can take the emotion and the fear out of it and look, okay, what's really happening, at a data level. And if all of this is still, I don't have time for this, that's perfectly okay. Hence why we have the group buy into the newsletters, so that we may not get the coins at the lowest low, but we'll get them at a point where these other experts have done their analysis and feel there's going to be a good run. Again, what Leo is sharing with you is the next level, of this, of being an investor. Take it away.
Thank you very much. And then just to make the point of that, and thank you for bringing that up, Vijay, is let me give you guys an example. This little dip that you see, that was China and Jamie Dimon making their statements about banning whatever ICOs and cryptocurrency is a scam and so forth and blah, blah, blah. And then the next day, Chase ends up buying Bitcoin. Like, really? You caused this and then you go and buy it? Well, that seems a little weird. But here's the thing. So people who are holding Bitcoin, let's say you bought Bitcoin, you're right here. And you're like, oh my God, they're closing the exchanges, they're doing this, Jamie Dimon says this is junk, blah, blah, blah. And this thing goes down 25%. All these people panicked. And the people who held on, because they knew that this was just going to be a bounce, I'm going to watch really what's happening in this right here. Is it holding the trend? If it is, awesome. I'll stay with it. Or I'll buy some more. You buy some more and you wait till the next write up, and that's 117% on Bitcoin. I'm letting that sit for a minute. 117% growth on Bitcoin. That's not an easy task. Now, would you have gotten out of there? Probably not, and would be a little freaky to kind of see this thing go down again. Yeah, but if you bought down here, you're not too worried about it, because you're going, I bought here, I'm going to hold off. I see a trend. And wait a minute, it didn't go that far. I'm staying with it. I'm not going to mess with it, and I'm just going to let it ride. Now you held on, and look at that. You wrote it, let's say, to the 20,000. That's 450%. That's because you had a little bit of knowledge that said, well, you know what? If it breaks through here, this is literally just one tool. There's others that kind of confirm or help you get clarity. There's nobody, I don't trade on one indicator or on one tool. There's a bunch of others that help you give information from different angles. And when information comes together, we call that confluence. You got Altschner saying it. You've got the charts are showing it. You've got somebody else that also told me about it. You see the patterns are holding. You know what? It's all lining up. I'm going to stay in it. So that one little bit of news isn't going to freak you out. See, when I went through I went through the whole roller coaster, emotional roller coaster. So now that we're going through this one, I haven't been concerned. I'm like, nah, we're good. Even if it dips down into the 7, 8, I'm not concerned. Now, if it starts to break through that 7.5 in the downward direction, I might be like, you know what? I'm just going to cut my losses here and try to pick it up back down low. But it may not even get there. It may just bounce. So, were you going to say something, Vijay?
Yeah. Just want to kind of share something from my experience, Leo. So, I've basically been following James and Tika, to the T. And, at the height, since starting in mid-October, my money went into the market from mid-October to about mid-November. And at the height, I made about almost a 350% ROI, looking good. But I didn't have the technical knowledge you're sharing to know when to sell. Had I done, and this is why we're having this call, had I done, I would have been able to recognize some of the selling points, in these trends, and then get back in low and high. So it's not that you have to do this to make money. It's just that with this knowledge, you could probably make, maybe a 3x more on the same amount of money by just knowing some of the stuff we're talking about. And, again, if this seems overwhelming or too much, just stay in, right? I mean, you can, you pick the right coins. And again, if you look at the track record of both James and Tika, they've nailed it over time. So you can just buy in when they say, get out when they say, and not have to deal with this. And if you're willing to put a little bit more, effort into tracking some of the coins, and again, you could just focus on 5 to 10 of the key coins. You could probably do 3x, 5x of just buying and holding at the same time.
Absolutely. And here, thank you for that. And that's absolutely correct. So everything that you're sharing, you could literally just stay with what you got. And based on the track record that you've had, your likelihood of doing really well is going to be really high. Now, people I know get the bug, because all of us get it. Like, you know what? I'm making good money. How can I make more? How can I make this even better? And that's where you go, if you'd sold out at roughly towards the top, 20,000, and you were able to get back in at 10,000, you've doubled your Bitcoin. And then you write it up. You're like, oh my God, it's such a fun ride. But what's actually most frustrating is believe it or not, it's not actually losing on a trade. The most frustrating for me has been where you've seen the pattern fold, you see it happening, and then for some reason it held back. I'm like, nah, I'm not going to do it. And then you see it do something like that. You're like, oh, I totally missed it. Oh my God. So then that goes back to the story that I share with you guys. Had I taken action on my gut and what I understood and what I thought was going to happen with Bitcoin back in 2009, I'd be 200 plus million into it if I had forgotten about it and just picked up my wallet now, right? Who knows what would have happened, but it's just a fun story to tell anyway. Well, kind of, because it's $206 million. I would have left to have kept, right? So off of this, you could literally do this. But here's where you start to kind of go, okay, I can be drawing all my tools, or I could learn that there's other tools. For example, an indicator here, I'm going to call this a moving average. And notice what this moving average does. I'm going to make it bigger, and I'm going to make it so you can see it better. Make it yellow and wide. And I'm going to make it something like a 7 rather than 9. Look at this. What do you guys notice? See that yellow line going ding, 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 ding? If I was drawing a trend line, initially I would have drawn one right there. Then I would have drawn a trend line this way. You see how it broke to the downside, so that means it was going to fall. It broke to the upside, that means it's going to go up. And then I would draw another trend line. Hopefully you're seeing what I'm seeing here. That, wait a minute, this yellow line is like a bunch of trend lines put together. What if I traded my cryptocurrency based on this yellow line? If it stays above it, I'll keep it. If the body goes below it, I'll sell it. When it hops back on there, I buy it. When it goes below it, this one would have been borderline. Maybe I would have stayed, maybe I would have gone. Remember, we were having that same discussion a little while ago. Wasn't sure. Maybe I'll just keep it, see how it does. Then it bounces up, rode it, and then, oh, it's coming down. It looks like it's coming down. Not really sure. It went up. You know what? I'm going to get out because I think it might come down. Boom, next one. The body broke below the yellow line. I'm out. And now you just wait. Now pick it up, see if it bounces up in here. I'll pick it back up. So yes, retracement and reversal. Yes, there's a we can have some really good discussions. So I want to make sure that I address it from people who are beginning, and I don't want to get overly technical. But what I wanted to point out here is, yes, there are certain patterns of how much a coin will go back. Retracement or reversal. The differentiation for me, a reversal and a retracement. Retracement generally tends to go to a certain point and it bounces back up. A reversal, meaning it's literally on the back end of what we were looking at here. This to me would be a reversal. Let me make this bigger so we get, okay, so this would be, and some would argue with me, that would say, that's still a retracement. Okay, fine. But to me, a reversal is you've gone to the top and you're coming all the way down. You're getting down towards these numbers. A retracement might be something to me like this, where it comes up, it dips, it retraces back a bit, goes back up, it retraces a bit, goes back up, retraces a bit, and it flies. Okay, we're going good. Here is still a retracement because I'm not sure if it's going to continue up. It looks like it's coming up, it's breaking down, and it doesn't seem to be coming down. Now, if I was to be able to draw a line on this chart, there would be a line coming right along here. Ding, 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 ding. Actually, see, I think I can actually do that. Let me annotate and draw a line. On this image, I could literally draw that line. And I can move it around a bit if I wanted to. Let's see if it'll let me do that. Well, close enough. We got there, and I would have gotten out somewhere here. Now, if I came in somewhere down here, I'm still in profit. And this whole ride, I would have not had to go through that whole piece. So having an understanding of some of the basic tools comes in very, very handy. And that's why I've chose to go into the market. And it's very interesting to see how these patterns repeat themselves over and over and over again. You're like, oh my God. I was shocked the first time I saw it. I'm like, wow, that's really.
Hey, Leo.
Yes.
Can we pull up maybe a coin that either you remember offhand that either Tika or James recommended? I think TND may be one of them, Stellar may be one of them, where you spotted the trend, a few weeks prior to them announcing it, just so we can see the difference between technical trading and fundamental trading. Because if someone's trading with stocks, usually they're also comparing it to some fundamentals as well. Because what we're looking right now is at technicals, which is spotting trends and configurations in the charts. And what James and Tika are doing is fundamentals. And I think when people grasp the how to use both simultaneously, it puts them in a much greater position to make investment decisions.
Mm-hmm. Absolutely. So here is, remember, I've been, my trading experience in terms of doing the trading analysis has been about 6 months. Prior to that, I was researching, still involved, but I was similar shoes as you were. I did not have anybody who really taught me. I kind of was just researching, trying to figure it out, and then eventually came across a few individuals and trainers and coaches that really helped me out. And then from there, I started knowing where to really focus my attention, and that's when things started to take off. So for one of the coins is Stellar Lumens that they talked about, right? Now, when Tika brought it up, James brought it up, I believe it was right around November or December, somewhere in that.
Yeah,
around in that. So, yeah. So this is right around November right here. Okay. Well, it was right around here where initially I heard the news that XLM had paired up with IBM. So I immediately went to my charts. I'm like, ooh, what's going on here? So I saw this, and all of a sudden you see this spike right here. Like, oh, now I happened to get in on that spike initially. And I'm like, okay, let me see how high this thing will go. But here's what news does. Okay, news will give sometimes a lot of times a coin a sort of the ignition. Like it'll push it in one way or the other. Hey, Stellar Room is just paired up with IBM. Awesome. It'll be a burst, but that thing is coming back down. And then the pattern that you already had going on continues as if this hadn't happened. So if you kind of go through and you're seeing that there's a trend right here. You're going, okay, got it. So here we go, initial spike, something happened there, come in here, hey, IBM, all of a sudden you're like, whoa, this is October 17th. I rode that wave right there. And then I'm like, you know what, I'm gonna get rid of it. So I got rid of it and I just waited. And then it was right around here where I'm like, you know what, it's at a dip. I like what this coin's doing. I'm gonna get back in here. Now, all of a sudden, Altschner comes in and says, hey, XLM's really good. You're like, oh, I'm so happy he said that. Oh my God, I'm so excited because now it's confirmation from somebody else that we got that going. There's that initial bump. And again, it's not going to hold because it doesn't have enough strength from the market to actually do that. Then when it starts people start coming in, if I was to draw another trend line here, even if I ignore that initial bump, let's say I ignore that initial spike because I'm like, you know, that wasn't sustainable. I don't think it's going to happen. So I'd maybe draw it around there. And I'm going to keep an eye as to when that pattern might break. So I might do something like that, or I might do something like this even. I want to see confirmation that it's going to break through. Now here's what I saw here. All of a sudden it's coming in, it's come up and it hit it, but it couldn't get past it. It tried to go up a little bit, couldn't get past it. It hit it and it broke through. So that was really exciting. I'm like, ooh, this looks like it's ready to go. But then it got rejected. And what I mean rejected is the price was not really accepted at that high and it dipped again. But here's what I know, that when it got rejected, it tried to break through one time. It tried to break through, I can even argue this one, but I'll argue this one. Once, twice, 3 times. Now, generally, most things tend to have a 3 to 5 point pattern, if I would call it. It tried to break through. If I count this one, we got more. We got 1, 2, 3, 4, 5. And now that 6th one, I'm like, oh, I'm sitting pretty. I'm sitting pretty because this thing is going to break through sooner or later. And it broke through. Once it broke through, it almost is like, you can almost feel it. It's like, yes, it took a lot of strength to break through. I'm getting tired. I need to take a little break. But it's just a little break. And if you notice that line, if I extend it a little further, what used to be resistance is now considered support. Now let that sink in for a minute. What used to be resistance now becomes support. And now when it hops from that support, now it's ready to, it's like a trampoline. Look at that, baby. Look at that. That's just a fun ride. Let's see what that ride is. That's 336%.
Hey, Leo, not to keep interrupting you, but I think you raised a really important point here. Every time Tika makes a recommendation, he ends his newsletter with, do not chase the coin. And I had to make a few mistakes to understand this, because by the time I got the report, sent the notice out to the group, and then got around to actually buying the coin, it quite often had passed his buy suggestion. And Stella comes to mind, and there's actually another one where I chased the coin. Basically, he made a recommendation. By the time I looked at it, it was a little bit higher than his buy recommendation, and I was like, oh, I don't want to miss out. So I bought in. Now, in the long run, it didn't matter because it went higher. Mm-hmm. But almost every single time, I mean, we see that post-alert dip where something came out, the news triggered it, he recommends it, people buy in, the coin rallies. Then almost every time there's a dip before it goes off on its run, right? So if you are tracking newsletters, if you are tracking the recommendations, you see a buy recommendation come out, and it's already crossed the buy recommendation, just keep an eye on that coin for the next 3 to 5 days. In 80% of the time, historically, it's come back down, below the buy recommendation point. So again, when it's tempting to chase the coin, that simply means buying the coin over the buying price recommendation. It's far better to wait and maybe, a few days and then buy back in later on.
And I'm going to supplement that a little bit. Thank you for bringing that up. And I'm going to also supplement that we all at one point or another get caught up in that, because there's three phrases that you'll hear quite often. You hear FOMO, fear of missing out. And that's when we tend to start to chase that trade. We're like, oh, it's getting bigger. Oh, it's going up. I want to get in. Oh, I need to get in. Oh, I get it. And then you get in at the top, and all of a sudden, bam. You're like, now you're pissed off. Okay, so that's the FOMO. And then there's FOMO, what we call FOMO waves, and you can kind of start to identify what happens, and that's when those candles start going really fast, really big. And then there's FUD, F-U-D, fear, uncertainty, and doubt. And fear, uncertainty, and doubt create these dips. But as an overall technical analysis perspective, and most technical analysts will tell you this, it's like, oh, I like that FUD. Oh, let it come along. Let them think that Bitcoin's crashing. Let it think that it's going to die. Because what that means is I can buy more cheaper. And this is all panic selling right here. Fear. Watch it. The first one is probably profit taking. But after here, it's fear. It went up a little bit. Fear. Went up a little bit. Fear. I mean, that's literally fear. And there is a saying out there that says, buy the fear, sell the greed. This is, I'm going to get my Lamborghini. I'm going to be super rich. It's like, oh, time to sell out. Oh my God, this isn't going to last. Like, this is not going to be any good, blah, blah, blah. Buy it. And I'm not telling you to do that, but what I was saying is that is a mindset. And it's kind of counterintuitive almost, because we would think, well, it wouldn't have to go that route, but that's exactly how the market tends to work. So the question becomes in moments like this, because we're looking at stellar lumens, is this chart right here doing that back part of the wave? Is that here? Is this right here? Or is that this right here? Because if it's this right here, we've got a nice long right left. So that's where even the most basic technical analysis comes in very handy. Right now, if I'm doing this, I'm drawing a trend line to hold that, if I want to do it that way. Or I could draw a trend line roughly from about here to, let's do this more this over here. And why there? Because that's where the bodies tended to close. That's where most of the action is happening. So right here, the bodies, see how it bounced once, it bounced twice, it bounced 3 times. Now the question is this going to be like a trampoline and it's going to help me fly up? Or is it going to start to break down through these? If it starts to break down through that first one, and then it starts to break down that second one, I would probably end up getting out right about here. Because I'm going, yeah, this is not looking good. It's already tested it once, tested it twice, tested it 3 times. This is the 4th time and it broke through. I'm going to be really careful around here, because I can get out and then I can just pick it back up towards the bottom. But if it goes in an upward direction, love it.
Hey Leo, is this where you might sell like a sell limit below that trend line?
Exactly. So there's a stop order, which basically a stop order is saying, hey, if the price gets below this point, sell it. If it goes beyond this point, then buy it. So it kind of gives you an idea. And there's a bunch of strategies that people play with. And that's kind of what I do with, when I work with clients and students, and that's what I tend to do. I tend to help them with identifying the pattern, because I'm seeing a beautiful pattern right here. See that W right there? There's like a W forming right there. That's a beautiful pattern. That is just so nice. If the next candle closes right around here and it's green, I'm going to be really, really happy, because I know where it's going to go. It's going to go down for a little bit, and then after that, it's going to fly. and that's going to be a really nice ride. So Tika, obviously Tika and Osho, they know what the heck they're doing, which is great. And they're giving coins that are really good, solid coins, and they will be, they'll continue to do well. But where we get caught up is, hey, if I could only get more out of that, because I know it's a good coin, that would be really fun. And that's where the trading analysis comes in. So I know that you guys have been here for an hour and 15, and I want to make sure that I start wrapping this up a little bit. So I'm going to see how many more questions I can actually answer. And
Leo,
I'm willing. Yes.
Yeah, Leo, just wanted to understand. There were quite a few of these groups that I'm part of where, some of these people say that they are part of this pump and dump,
Yes.
pattern. So typically that does not allow us to understand the trends in such a case, because these people, there are people who are spreading that, how do you say, fear, or spreading opportunity, and they're just going, like they're creating, or they're fabricating that wave. So how do we get to know whether this is the pump and dump, or is this a wave?
That's where trading analysis comes in a little bit more. And this is where you start getting, that's just where you want to, educate yourself a little bit more. What the simple answer that I can give you is looking at volume. Okay. You see, and this is what I mean by volume. See how this thing just spiked up here, came down, spiked up here, came down, it dipped down, spiked again, came down, spiked again. Okay. This pattern of it going up and down is fairly common. And I'm going to mute you just for the moment, just so that I can make sure that we have a clean recording. But if you see that there is a wave after another wave, potentially after another wave not too far from it, then that generally tends to be a natural cycle of growth. A pump and dump, and this is what we tend to call, a lot of times we call them shit coins, because they really tend to be. And I'm trying to think of one, I don't know, off the top of my head. Let me look under Bittrex and just pick something that might fall into that. Let's go to, I don't know this one. Usually the low volume ones initially be, let's see if I can have Cure Coin. I don't know anything about Cure Coin, but.
Did Verge go through some of that, Leo?
XVG, I'll take a look. Oh, here we go. Here's a good example. Okay. You see how this graph, this chart, follows very little to something like this? That is a huge red flag. I mean, you're going boom, 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 spike down. See that big old red candle right there? Where did it go? Right here? There's a lot of people in pain right there. Because they're like, oh yeah, it's going to be really good. It's going to fly. And then boom. And now you got to wait through all this depression, and you got to hold on. When you see the big long wicks like this, that's another little indicator. See how there's one spike here happened July 17th, and the next spike didn't happen until, well, there's a little one here on August. And then there's another little one about a month later, or almost at the end of the month. And then nothing happens. And then there's another huge one right here. Those are more indications of pump and dumps. And I stay away from that. I'm like, you know what? I'm out of here. No, I don't need to play this. It's, there's too many opportunities to be playing this stupid pump and dump game. And the pump and dump game actually can get you in a lot of trouble. There's actually exchanges who have banned accounts because people have been part of a pump and dump group. And they have ways of identifying some of that. So you're welcome. Hopefully that answers that. So Binance says, see, there's also exchanges. Well, I mean, there's so much that we could talk about. Binance, and so somebody brought up about Binance, understood Binance, but wondering specifically on Coinage. And not flip to conversion.
That question was, right now you're looking at the charts in BTC. In Coinage, can you look at the charts against USD?
Yes. So if you go Ethereum/USD, yes, USD or USDT, depending on which exchange you're in. Bittrex doesn't do USD, but they use USDT. Binance, Bitfinex that's USD. So yes, this is Ethereum USD. And this is why this is a very, very powerful process, because now you have everything in one place instead of having to hop around from exchange to exchange.
Cool. Another question here. I believe the strategy works no matter how much how much investment you're doing, right? I mean, it's just, it's not relevant on the amount of money you're investing.
Correct.
Yeah.
I mean, the strategies are strategies. And then here's where, you start to learn how to go from a larger trend to a smaller trend to a smaller trend so that you can see where you are in the cycle. And that becomes an important part, because if I start looking at this graph from the 10 minutes, I mean, you've got a whole different view. And this is going to take a little while to load, but it's like, wow, it looks like it's coming down. It looks like, oh, okay, I don't know, Ethereum's going to go down, and and when you look at the big picture, you're like, Ethereum's not going anywhere. Look at that.
Right.
Ethereum it wouldn't be a surprise if it tenfolds this year.
Wow.
I'm not making that prediction, but I am saying that I wouldn't be surprised. Because if you notice, look at this right here. And when you look at Bitcoin, does anybody notice any pattern? Ding, 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 ding. Come down a little bit, starts to come up a little bit. Let's go to Ethereum again. Ding, 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 ding. Came down a little bit, starting to come up. This thing is nowhere close to done, in my opinion. And look at the volume. Okay, so this is a good example to a coin that is not a pump and dump. See how it went down? Look at all the volume. Volume, 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 volume. Obviously volume down, but still a lot of volume, 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 volume. That means people are taking their money and putting it into coins like this. And that's where it becomes powerful.
Another question here, Leo. Maybe you don't know this. I don't believe your background is stock trading, but there's a concept known as a golden cross in stock trading.
Yep.
So is what you're referring to similar to that concept?
There's a silver cross and a golden cross.
Okay.
So the golden cross is when, and this may get a little technical. So if you guys are doing this stuff, then awesome, great. You'll get what I'm saying. If you don't get this part, don't worry about it. You're not missing out. So don't let your FOMO, your fear of missing out, affect you. It's basically when a MA50, the silver cross is when a moving average of 15 candlesticks crosses a 50-day moving average, or 50 candle moving average. A golden cross is when the 100 crosses the 200. And this would look something like this. So just so guys can have an idea. MA cross. And I'm going to go, so what you're talking about is this. And I'm going to have to do it on the day because there's not enough data on the monthly. Okay. Do you guys see how I already had it preset, so that's nice. Okay. Do you see how I'm trying to get it even as low as I can so we can see it? Okay. Do you see how this orange line crossed the red line? That is considered a golden cross. And look at,
Hey,
yes.
Leo, so the question on that golden cross was really pertaining to the moving average and the denomination. You look at the moving average, and typically in stocks you look at it on a daily basis, right? So here we go hours, weeks, months. Is there a specific unit of measure that you look at for golden cross or silver cross or bell cross?
Well, a certain unit. I'm not sure that I've understood that part of it, but I understood the part of, if you're talking about how many, like you're talking about the time frame.
Exactly.
Okay. Yeah, the time frame, I would actually, depending on what the type of trader you are, and that's the other thing that we need to look at when you're talking about trading. What type of trader are you? Are you a trader are you doing scalping? And those of you who don't know what scalping is when you do it on this really short time frames and you want to get in, get out, get in, get out. Are you a positional trader? A positional trader is somebody more, but I think we have more people in this group that are more positional, which they say, you know what, I'm going to get in and I'm going to write this out for 6 months a year. So when you do that, if you're doing or a positional trader, you want to definitely look at the larger time frames. And this, obviously a month was, I don't have enough data. A week, let's take a look. Okay, I still don't have enough data to even draw any of those crosses because there's not enough candles. So then I break it down to, can I do 3 days? Okay, yeah, but I can't see where that cross happened. All right, let's go to the 1 day. Okay, now I see where the cross was starting to happen right there. Right there is where it crossed. Now, here's the beauty of it. Some people just simply, honestly, they just trade on the silver cross, the golden cross. That's all they do. They're like, here we go. Get in. I'm not, unless it crosses that red line, I'm not getting out. Or unless it crosses that orange line, I'm not getting out. I don't care what happens. So they get in, they're like, ding, 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 bounce. Okay, ooh, it crossed. I'm going to be careful. If it gets any further than this, if it touches that red, I'm out of here. Nope, it bounced back up. Oh, it bounced back up. Oh, this one dug in deep. Oh, I don't know. It almost touched that red line. I didn't touch the red line, so I'm going to respect it. And, oh, I'm glad I did. Orange. Oh, look at that beauty. And there's another pattern going on here for those of you, because it sounds like there's some traders in here that kind of done this before, which is great. So if you're a trader that traded before, can you tell me what you see there? What is this called? Anybody know? Type it in your box.
Divergence.
Well, there's convergence happening there, which is good. The other thing that's happening, see this, it looks like a triangle. Right there. You see that? That's called an ascending triangle. And the minimum, generally the minimum that you get off of an ascending triangle pattern, if it breaks through to the upside, it would be that length. And this thing not only met it, but it surpassed it. So, but I could have done is I could have taken that just solely as I understood it, sold out right here. I don't care if it went up a little bit more, and look at that, picked it up right back down in here, anywhere in this region, and then I would continue right up. So those are the kind of things that when you understand that, how the patterns work, how the tools work, what the momentum and all that kind of stuff. That's why, like when Vijay mentioned this, I said, well, I can do a quick crash course and I'll be happy to help, but there's going to be so much to cover. There's no way to try to be, because one thing is just doing the crash course and the other is actually living through that experience. And those of you who've been trading, you know what that means. You're going, I got to hold. I see it. I got to respect it. I don't let my FOMO kick in, and then be able to, you're glad that you did, because all of a sudden it did that and it broke out and you're really, really happy. Meanwhile, everybody else freaked out and they got out, which kind of comes in handy for us because we're like, if you freak out, I'm sitting there waiting for you to freak out so that I can buy more. And it sounds,
to respect everyone's time, I knew that would be a somewhat of a miracle to squeeze in everything in 90 minutes. But I think, hopefully people have got at least some knowledge on what to start looking for in terms of technicals. I mean, again, by no means was the purpose of this to make anybody here experts, but just to pique your curiosity of how you can maybe start to learn more about technicals to support the fundamentals, which is what we are predominantly doing in the group, based on Tico and James' recommendation. But now you have just another toolkit to start using. Leo, if somebody wants to kind of do a little bit more training with you, or like learn more, where do they go? How to go from here?
So I'll do two things. Thank you for bringing that up, and I definitely want to be respectful of people's time. And here's what I'm going to say. I'm going to share with you a couple of things as to finish off that PowerPoint presentation and what's next. And from there, you guys can decide what you want to do. Honestly, I have to say this part because people have said, okay, well, why are you even willing to teach? If you're making money, why are you willing to teach? And here's the answer to that question. Number one, yes, I do make more money trading than I would teaching. So it really doesn't make sense for me to go and teach. However, here's what I understand from the mindset perspective. If I'm able to create, which I have done, it's not if I'm able to, when I'm able to create a group of individuals that are have some level of training. They know what to look for. And these are individuals that I can trust because there is no conflict of interest in terms of what we're all striving to do. Then that group becomes gold. I mean, literally gold. Because you know that when somebody in that group says something, then they have at least some level of experience, and you're not looking at a complete newbie. It's not just somebody, hey, I heard that, I heard the funny, yesterday somebody told me about a coin. Hey, I hear that Vibe is gonna do a commercial in the Super Bowl. And I'm going, wow, that would be a really good thing for the coin. But then I go look it up. No, somebody on stage is going to be wearing a shirt that says Vibe on it. That's not at all the same thing, right? So you start to be able to discern. So what was clear to me is that when I create a community of individuals that can trust one another, has a certain level of training, has looked at the same things, and people are willing to support and help one another, then that becomes a really, really powerful community. And so when Bijal asked me, I said, hey, would you mind sharing what you know? I said, absolutely. And yes, I am willing to teach one class. I don't know if I'll ever teach another one, but I'll teach one class of people that are in my inner circle, and obviously they're extension of them, and make it completely affordable so that if they want to do it, awesome. If they don't, that's totally okay. I'm not going to pitch or do a big pressure sale or anybody, but I know that that's something that people want. So before I share that with you, I'm just going to say this. If you're totally new and you're just starting out, start getting with Bitcoin, with other cryptocurrencies, go to CoinMarketCap, go to the pre-page, which I'll put up in just a minute so you can see it. Get a wallet, get started with your own cryptocurrency, get a debit card so you know how to get it in and out. Decide how you want to grow it. Am I a buy and hold person? Am I mining? Am I trading? What do I want to do? Diversify. That's where you minimize your risk. And from there, you can start growing. So here's ultimately what's going on. There's the free resources, which I put up here. You can go to bodymindsuccess.com/Bitcoin. I'll make sure you guys have a recording of this so you can kind of go back through whatever you want to go through. And the one that I'm doing is Crypto Success Training Sessions. It's on bodymindsuccess/Crypto Success. I am doing it on a time frame. I'm only doing one, and I'm only going to take 20 people. I did a presentation to another friend of mine that put people together, and I talked to them, and there's only like 6 or 7 people that showed up to that talk, but everybody signed up. You guys are the second group that I'm doing this with, and there's only one more friend that I'm doing it for on Saturday, and that's going to be locally, and I'm going to share with them. I'm not going to take any more than 15 to 20 people so that I can keep it personal, and that'll be a very private group for that. Now, if you guys know at all my rates, so you guys don't know my rates, but when I consult with somebody, I charge $500 an hour for my time, and that's what people pay me. So, but I don't want to do that for the class. If I choose to do another class in the future, it'll be more along my rates, but this particular class is definitely a lot less than that. It's actually half that price, but it'll only be for this one. And the only reason I was kind of hesitant to say it on here is because it's being recorded, and I want to make sure that for the next cycle, if anybody's going to go through, they don't think that it's going to be that price. It literally will be at least $500 next time. But right now, I decided to do half. So if that's something that interests you, that you want to do, that you want to have, then welcome to it. I'd love to be able to support anybody that wants to be a part of that, and we'll go from there. So now that that's done, give me a second.